This conference will now be recorded.
So we're going to exit these positions that we have crude oil calls for the 55, 50 strike, 56 strike, and the gold call we had at the 1510, which was in the money up to $7.70 as the high, as we saw it put in there on Wednesday session was at 1522.7. So we did have some in the money moments, and we covered those in the broadcast. Obviously, on the YouTube videos, if you look back at those, you can see how that was in the money at one point. In fact, you'll see that every single one of these has been in the money at some point. So that's kind of a problem that we will be looking at from an operator standpoint. But as far as the software goes, the software is very functional. It's been displayed the ability to function, monitor, execute, add to the dashboard current positions and potential future positions, and look at the effect that the updated price in the market is having on that position. Today, we're going to cover one specific feature, and that is the close time. We have not checked or toggled the auto re-enter at profit, loss, or reverse action at loss. That's a whole different discussion. We are toggling the limit exit as opposed to the market exit, which the limit exit we expect is substantially more competitive than the market exit, which is simply just filled at essentially the best price possible that is displayed in bid form. Whereas the limit exit is going to start essentially at the ask and work its way down until it's filled, after seeing if it is filled each increment on the way down until it's slightly more competitive. In many cases, it could be extremely more competitive, all depending on market circumstances and liquidity factors, of course. That is essentially a tool to use. It doesn't have any guaranteed performance as to whether or not will work for a profit. Sometimes it could de-escalate all the way to the point of the bid, in which case, it would be the same as a market order. And in cases where the market drops precipitously, with the extent that the limit exit is dropping is going to be a factor as well. It could be a risk if the market drops precipitously, exceeding the rate of the limit exit. So these are all factors. But today, we don't have that issue. We have a much larger issue that from an operational standpoint, an operator standpoint. We're not exiting when profits were essentially taking place on each position we had. We should have used the bracket order tool, and we should have entered profit percentage, and in many cases, if it not have been excessive, to around 20%, each one of these positions did experience profitability. So let's not get too carried away on that. We streamed most of that already, about 11 hours a day. You can look at that if you wish. Closing today at 358, 357, that's the goal, because we do have really close to in the money, and it'd be great if gold's going to skyrocket or crude skyrockets. Unlikely, not expecting it, but we're not going to get out prematurely because there's no reason. The bid's already zero. So we're just going to cascade lower from the ask. It's 319. We'll just set this. If we said, of course, 30, it would be indicating 30 minutes, which would put us, of course, in that case at 349. In this case, we'll just put it at 57, okay, and that'll give us, correct myself. We're just going to put it at 37 there, and that's going to give us right into the close there, just moments before the 4 p.m. Close there. Okay, so that's what we're going to do here. We'll resume the recording here as we approach that, so we can monitor the activity in the orders log.
This conference will now be recorded.
So yes, sir, that's correct. In about 37 minutes from when we entered that, which was at 319, and I didn't hit tab, so we're going to have to resubmit our calculation. So to submit the figures, we hit tab, so it's 322. So we'll just put in 33 minutes and hit tab there, and that submits that. So 33 minutes from now, we'll see the limit order cascading to get us a more competitive exit than what is currently displayed. We'll be making the market with limit orders.
This conference will now be recorded.
What happens if it doesn't come? Or what happens if it takes longer time to really do?
The answer.
This conference will now be recorded.
What happens if it takes longer time to get to our negative offset. Sometimes it could be hours, sometimes it could be days. So if we do see some potential, in the stock market or the future market, we don't want to be using a mathematical number such as 30%, 20%, 10%. It's nice, look for that kind of number. But what my suggestion to you is we can base those offsets based on some technical or some price projection or some other fundamental or something like that. Not a simple arithmetic number, a number, like a numeric number, because the numeric number, I do not know how far it can even come to the area that we wanted. So that is what I want to mention. Offset is really good. Normally I use the offset is I told you, right? So further, if you are going to be using 30%, 20%, like that, we have to have a solid backup. Why did we even choose the 30%? So that is what I wanted to basically have you take a look at it when you do that. I mean, I may not be doing that far, like 30%, 20%. I might be doing maybe 1 to 2% or 3%, something like that. So that somewhat it is in line. But even how did I even pick up that 1% or 2, 3? So I have to answer to myself, how am I picking it up? So that's what I wanted to bring that up to your attention.
Sure. I understand where you're coming from with that. And the answer is, and in regards to what you were speaking of, the offset, essentially what the offset is, when we enter a security and in terms of options, get the option list, the exchange, we select the respective contract expiration, and we select the amount of option change we want to see exposed. And it does both sides, calls and puts, a symmetrical amount. So we have 2 calls and 2 puts. If we put 2 here, if we put 4, we would get 4 of each. And of course, we enter the quantity that we're going to enter with. And since the software does not support shorting of options by design, of course, that's not to say that there could be an error, of course, but we have never observed an error there. But we do not provide the ability to short an option. And we use a parent order type of limit, and we can select where we want an offset from. In the event of just simply sending an order at the bid, which would be somewhat competitive compared to a market order, we can just do 0. In the case that we are not going to be able to use the bid because we want to be more competitive, we can select a negative offset, and that will essentially populate the options we selected with the quantity we've entered, with the limit offset base being the bid in this case, and it being negative 25 offset. That is 1 tick in the case of a Globex. Over $5, below $5, of course, it will have a smaller fluctuation. So let's click populate here. And we're going to add, as you can see, 4 calls and, as you can see as well, 4 puts. So this is quite helpful. And we also have the bid, and we're trying to get a more competitive price of 25 cents cheaper. The bid. This is helpful because this ensures that you're getting a competitive fill, because, of course, this is below market price. And of course, we also know that the option market is notorious for volatility, and you're likely going to go below your current market price. As we know, about 90% of options, give or take a few percentage points. You can go over the stats on your own time, of course, to verify that, but I know that it's a high percentage of options expire worthless. So we know that most of these are going to go down by default. So with that said, if you're just patient enough and you have enough securities with these offsets down there at a high percentage, you have the possibility of essentially saying, okay, well, I know that most of these are going to expire worthless anyways, so I might as well just get a good discount to get in there. So that's the philosophy behind this. And you can see we have quickly basically reduced our risk, and we haven't even submitted these orders. So whenever we submit the orders, it's dynamically going to submit bids, limit orders to buy at the respective bid. for that security. So it's very dynamic. And of course, we can take this a step further. And let's say we have the S&Ps there. We feel like that's a sufficient amount of order placement. Now, some of these might not get filled, as Nathan mentioned earlier. That's a very real reality. And that's why I think the power of quickly adding multiple securities on multiple fronts and really trying to get good value for the risk you're going to take, which is you're basically buying something that's going to expire worthless without a doubt. I mean, you really get lucky if it's not going to expire worthless, because most of them will. Furthermore, all of these are already in the money options. So that's something to be said for as well. And if we really cover ourselves across the board here, going out on a limb that there's an expiration here for crude oil on the underlying 917, I believe. Let's see if this exists. I might need to double check when crude oil expires here. Let's go ahead. See, crude oil has a different tick increment, but let's go ahead and say we want an offset of not 25 cents. Let's use 50 cents. And let's go ahead and populate 10 strikes. Okay, and that is an error that I was expecting, because I'm not certain off the top of my head when the crude oil contract underlying expires. And currently the options need to be the same month as the underlying expiration when we pick the expiration. So we're going to go to NASDAQ real quick. And I know that that expires on September 20th. So let's go Globex, and we'll go down here, the 20th of September. So we've got 4 of the S&Ps. Let's just go out on a limb here and say we want to do 10 here on the NASDAQ, and we're going to buy only 1 of each. So that's a big difference there. And we're going to do the bid minus 2 ticks, more or less. And we're just going to hit populate there. And when we do that, it's loading. And you'll know it's finished loading when the quantity disappears. And look at all those tickers that we now have added on the NASDAQ. The call, 76.80, 70, 60, 50, 40, 30, 20, 10, evens, and 75.90. And then the puts, 77 even, 10, 20, 30, 40, 50, 60, 70, 80, 90. And we've got 50 cent offset, so we're going to be getting a better price. Now, what, of course, Nathan's question was regarding was, what if we set it to 30% or 50% or 80%, even 90, 95% if we're really going to be extremely conservative with our portfolio creation, which would have been a wise decision in regards to our actual positions that we actually do have in real life positions on crude, gold, call, 55, half, 56, even 50, 15, 10. It would have been very wise of us to use this tool, because if we look at these positions now, had we entered with a 90% offset, we would have gotten a fill on these more likely than not to buy them. And look at the price we would have gotten filled with, 1 cent instead of 57 cents. And I'm not saying hindsight's 50-50. I'm simply saying that as a matter of, we don't need to be afraid to be patient with options, because they do generally, they decline in value. Most of them expire worthless. So that's where we're coming from when we built this tool, was to craft a tool that can take advantage of the extreme discount in option pricing. And they're in the money, so any volatility, if we're buying the calls, for example, if we get a nice sizable pullback and we get filled on some of these calls at huge discounts, and then suddenly the market rallies again out of this in the money territory that it was already back, that it already essentially was in, it's already pretty much essentially discovered territory. Essentially, it's not undiscovered high volatility territory. It's kind of a range bound trading tool if you start to put these percentages low, extremely high, looking for a low price. So that's my answer to that, Nathan. I hope that kind of gives you where I'm thinking off that.
Right. Okay.
So you asked what we could do better. I'd say better entry prices, and that's of course determined by the operator who's using these tools. What extent of offset do they want to use? Do they use 1 tick, 1%, or do they want to use 50%? And then furthermore, another element that you regarding your question, how can we better improve from what we've seen here? As we've discussed before, Nathan, in private, profit targets and stop loss aspect of the bracket order being placed on an individual basis. We already know we can close a portfolio on a portfolio level basis. Profit and loss are determined, and if they are triggered, they will close the portfolio at the market exit or limit exit as determined. But in the case that we want to really hone in each individual position, I think it would have been advantageous to activate the bracket order option and increase the profit target from 0, so it's active, to maybe, I think we saw an increase of about 20% on all of the positions that we had. I think that's reasonable. If we wanted to be a little more risky, we could have said 100, and we actually did see that in the case of some of these positions, such as the gold. We recall, Nathan, and we streamed that, as you recall, on YouTube Live. We saw this go up to 15 at one point, so we bought it 472, asking for 100% profit target. In that case, was not all that far out of the bounds of possibility. As for crude oil, we bought 57. I think it went up to about 70 cents, so around a 30% profit target would have been appropriate. Not saying that we should have done that. I think we should have been pretty stationary on what we picked, either go with 100 or 30. But I think even making the slightest attempt to do that would have been a beneficial thought process to take on. It would have utilized the tools that we have at our disposal that we crafted for this reason. It was a mistake made by the operator, myself. But again, you asked what can we do to improve performance. I would say set individual profit targets and stop losses. And realistically, what would something been in a stop loss? You can see we rode the account pretty much to 100% loss. I would have probably done something around 80% realistically on a stop loss, and profit target probably been around the same. Maybe if I wanted to be extra quick, nimble, 50. Now again, this is all the operator's decision, and we don't know statistically what's the better decision or what's the worst decision, but we can say with a degree of fact, as we know from the position behavior, all of the positions we had in crude oil, gold, and the S&P's calls that we had, 3 of them, they did experience a degree of profitability, which from a percentage standpoint, I believe with the greatest attempt to recall properly, I believe each was over 10% from an option standpoint. So that's a pretty big return. So I don't think we should scoff at that in the future. I think that those 2 things will be tremendous value setters for our performance going forward.
Awesome.
Yeah,
so what about, James, what about the offset using the ticks? You mentioned about the percentage, right? So where are we going to say like now 30%, 20%, 10%?
Correct. These options are available if the user decides to choose in this section. Currently not visible here. So these are all, absolutely, it will be implemented likely in the next broadcast that we do, but we already do have the bit offset. Currently it has to be manually integrated.
Exactly. So instead of saying 30%, we just have to manually come up with the 30%, then convert that 30% to a tick, which could be like 150 tick or even 35 tick or 45 ticks or something like that, right?
Yes, sir, that is correct. That it will be the process.
For now, okay, until we come up with the automatic calculation. Okay, cool.
Yes, sir. I mainly referenced that in a display of the ability to improve performance. I was only referencing the percentage, as it's not truly available yet. That is correct. But I was basically giving that from a overview standpoint. I think it will be tremendously beneficial when we do have that, in addition to the tools that we already have that add tremendous value as well.
Fantastic. Good.
This conference will now be recorded.
Okay, so right now we are looking at a gold 1510 call, which is pretty much our best chance of any positive liquidation here. Gold's trading at 1509.2, so it's essentially 8 ticks away from profitability. So we just want to make sure this timer isn't pretty much getting us out of a possibility of getting some return, cash back out of this. If we can get it, we'll try and get it. So let's just go ahead and manually set this for 6 minutes from now. So that puts us basically at 358, pretty much as close as we can get. And if there's a code error, we'll just be able to manually exit it. So right around 357, we'll resume the recording here to cover that limit exit here.
The
This
world.
conference will now be recorded.
Go ahead.
You're right, anything can happen. That's true.
Yeah,
So we're about 2 minutes away from closeout here. Gold's at 1509.7, and we're expecting to see some orders come through here at 358. If the clock turns 359, we will manually click the close basket button, and if that does not execute, we will try and sell this position at scaling down from $1 essentially to manually. But we expect the software will work here, of course. So we're just resuming recording as we await here 357. We expect to fill here within the next minute here. So we are just counting down. Gold's at 1509.7, just 3 ticks away from our strike price, unfortunately, but that's the way it goes here. So we're just giving it a couple moments here, about 60 seconds. Okay, so 358 has come through. Gold's at 1509.8, so 2 ticks away from being in the money here. Just going to be patient here. Again, waiting to see if this we expect the time to come through here any moment now. Okay, you see that we have our open basket has become visible. Say close basket there. Okay, we're having a minor issue with the close button. That's an issue. I apologize. I'm going to try and manually exit this. All right, the offer is 1. Contract has expired. Contract has already expired. Well, there we have it, ladies and gentlemen. That was officially the worst week of trading I've ever had, and the software works, but let this be a reminder not to try and trade expired contracts.
This conference will now
Let's
be
give it a try.
recorded.
Okay.
We'll type in DB. Let's see if this the stock. It is after hours right now. I don't expect that we'll get a fill here because our softwares may not be able to handle this. Let's go NYSE. We'll go 1 share buy. Go limit and bid 00. Okay, so we'll just go with the bid. We'll do a bracket profit target of 3%, stop loss 3%. We'll add that, and it is not getting the quotes because it's probably closed. Let's double check one thing here. GE. Let's try the smart exchange here and just do one. Limit bid 0. Bracket. Add. Okay. So I think this is related to one thing. Let me check.
This conference will now be recorded.
All right, so let's look at the futures. There's the S&P load exchange. It's loading here. Take just a moment.
This conference will now be recorded.
All right, load exchange, Globex, contract 920, 1. Let's just hit add here. Not getting any prices there. Why? What is going on here?